I'm Managing Editor Kim Schmidt. Welcome to On the Record. Here's a look at what's currently impacting the ag equipment industry. Ag producers' outlook improved in July following volatility in the commodity markets in June and early July. That's according to the latest Ag Economy Barometer survey by the Purdue Center for Commercial Agriculture. The July reading came in at 112 compared to 104 in June and 97 in May, driven largely by expectations for the future. The producer index of future expectations jumped to 121 in July, well above June's observation of 107, and the highest reading for the index since data collection began in the fall of 2015. However, when it comes to current conditions, the index dropped to 93, down from June's reading of 98. James Minert, David Widmar, and Michael Langemeyer, the report authors, say that while this spring's uptick in crop prices was short-lived, it appears the price rally helped boost producers' expectations of future economic conditions in ag. This week's dealers on the move are Pape Machinery and Titan Machinery. Pape Machinery, a John Deere dealer, is closing its store in Bonners Ferry, Idaho, citing depressed economic agricultural climate in northern Idaho as the reason. According to Ag Equipment Intelligence 2016 Big Dealer Report, Pape Machinery is the 11th biggest ag equipment dealer in North America. The closing brings the dealership's total ag locations down to 20. Titan Machinery plans to build a 20,000 square foot location in Sioux Falls, South Dakota. The space will consolidate Titan's two Sioux Falls locations, a Case Construction dealership and a New Holland agriculture dealership. Now here's Jack Zemlicka with the latest from the Technology Corner.
Thanks, Kim. As our staff prepares for the 2016 Farm Progress Show, I'm always particularly interested in seeing what precision innovations companies unveil. It's worth following the evolution of new technologies, some of which succeed as mainstream systems, while others are perhaps ahead of their time. One concept which falls into the latter category is autonomous equipment. Seemingly on the verge of revolutionizing the ag industry for the last several years, autonomy is still largely in the trial and error phase, especially in the U.S. Still, the topic is ripe for debate, and I recently had the opportunity to moderate a discussion among 9 precision dealer members of the Independent Precision Ag Alliance at its most recent meeting in Gary, South Dakota. Part of the discussion focused on who dealers anticipate will ultimately be the driving force for autonomous vehicles in agriculture. While smaller companies may be able to maneuver and specialize more quickly to develop autonomous technology, will the large manufacturers be better equipped to finance and market the systems? This remains to be seen, but group members suggested that autonomous products may start as scalable aftermarket systems, possibly in the form of miniature planters or sprayers, performing field operations in a timelier and potentially safer manner.
Just because how quick that venture capitalist money and or innovation companies on the technology side are going to bring something to the table. I think we're going to see it hit an aftermarket side first before the large green red OEM type companies will be able to adopt and adjust their business scheme to handle something like that and develop their own.
Autonomy in ag will continue to be a topic of debate, with little consensus as to the true value of the technology until systems are commercially released, sold, and used on farms. Back to you, Kim.
Thanks, Jack. Deere & Company's ag sales were down 11% in the third quarter, while worldwide net equipment sales fell 14%. Third quarter net income for the company came in at $488.8 million versus $511.6 million for the same period last year. While equipment sales were down for the quarter, operating profits were up 4% for the quarter compared to the third quarter of 2015. This was primarily driven by price realization, lower production costs, and a decrease in selling, administrative and general expenses, partially offset by reduced shipment volumes and the unfavorable effects of the foreign currency exchange, the company said. Commenting on structural cost reduction activities during a call with investors, CFO Rajesh Kalator said Deere expects to improve its pre-tax income by at least $500 million by the end of 2018, if the large ag downturn persists at current levels. Lower production costs are largely due to layoffs. Since the beginning of 2016, farm equipment has reported on 4 rounds of layoffs, impacting nearly 500 workers. The latest round was announced this week following Deere's third quarter earnings release. The company also reported that worldwide financial services net income fell to $126 billion during the period versus $153 billion a year ago. Joshua Jepson, Deere's manager of investor communications, attributed the decline to less favorable financing spreads, a higher provision for credit losses, and higher losses on lease residual values. Commenting further on the lease situation, Tony Hugel, Deere's director of investor relations, said that in terms of losses that were recognized during the quarter, things seem to stabilize, at least in the short term. So while we take some comfort in the short term with the stabilization we saw in the quarter, it's going to be a while before we're willing to say we're out of the woods there. And so stay tuned. I think it bears watching and certainly has risks. Looking ahead to the fourth quarter, the company expects net sales to be down about 8% versus the same period of 2015. For the full fiscal year, Deere expects total net sales to dip 10% versus fiscal year 2015 and 8% for its worldwide ag and turf sales. Earlier this summer, we sat down with Don Van Houweling, owner of Van Wall Equipment, a 25-store John Deere dealership based in Iowa. Van Wall is the 2016 Farm Equipment Dealership of the Year. We asked Van Houweling what sort of impact Deere's acquisition of Hagie this spring would have on his business. Given Van Wall's location in hybrid country, as Van Houweling put it, they are situated to be very successful with the additional product line Hagie offers them now.
So one of the really good pieces of news for us was Deere's majority interest purchase in the Hagie product line, which gives us the marketing opportunity for those sprayers. Hagie has 2 products that really matter to us. One is a very high clearance sprayer, which allows us to apply fungicide in late season, and we really didn't have that design yet, and we're probably a couple years from having it. But in addition, this is hybrid country. We have all of the major producers right here: Pioneer, Stein, Monsanto, Syngenta. They're all here, and Beck's just moving in. And so all of that specialty equipment that they use to manage those crops, to detassel and manage those crops, fundamentally comes from Hagie. So there's probably not another area in the country where we'll have more benefit from the Hagie acquisition as a John Deere dealer than we will.
Titan Machinery, the largest farm equipment dealership group worldwide, announced its second quarter fiscal year 2017 earnings on August 25th. The company reported that revenues for the period were down 19.3%. Revenue from the sales of farm machinery was down by 25.5%, and construction equipment revenue declined by nearly 4%. Sales of equipment from its overseas operations also fell by 13%. Reviewing results for the second quarter, David Meyer, Titan Machinery's chairman and CEO, said we continue to concentrate on our inventory reduction, its positive impact on our balance sheet, and expect to achieve the $100 million inventory reduction goal for fiscal 2017. We reduced used inventory in the first half of fiscal 2017 by $39 million, or 15%. And through the first 6 months of this year, we exceeded our target by $13 million, or 40%, on our marketing plan of aged inventory through alternative channels. For the remainder of Titan's fiscal year, the dealership group expects same-store sales of ag equipment to be down 17 to 22%, construction equipment sales flat, and international sales down by 7 to 12%. And now from the Implement and Tractor Archives. While mobile service from farm equipment dealers seems to be somewhat of a new phenomenon, good dealers have been doing it for more than 60 years. Kevin Heisterkamp with Better Equipment shared this video from the 1950s with us of a mobile service tech by his grandfather Leonard Ryan's John Deere dealership, Ryan Implement, near Council Bluffs, Iowa, going out into the field to help a farmer who had broken down.
And his dad has found a mechanical adjustment needed on his tractor that he can't handle. That means a call to Ryan's, who send a serviceman on the run, fully equipped to get farm work going again with little delay.
Next week, Ag Equipment Intelligence editors will be at the Farm Progress Show. We'll have a report from the show next time. As always, we welcome your feedback. You can send comments or story suggestions to kschmidt@lessitermedia.com. Thanks for watching. I'll see you next time.